And so I'm just wondering, the surge in commodities that we've seen, and China very much the beneficiary of that, is that likely to continue? Because at the same time, there have been concerns that the situation is just not sustainable.
Good morning, Maryam, and thank you for talking to me this morning. The view from us in terms of China and commodities has been factored into the trade forecast, which goes out for 15 years, so it smooths over some of the temporary blips. And the forecast, looking over the next few years, does see slower growth overall, because we do understand the impact of the current fragility of the world economy, and therefore we do see world trade only growing by 2% per annum in the next 4 years as an average. But obviously the long-term trend is for that to come back, and 73% over the next 15 years is quite some growth. And of that, China will really drive a lot of that. As you say, it will become the world's top trading nation. And that will be both because of its exporting, but actually also because, of course, there is a burgeoning middle class in China that is increasingly importing too.
All right, but I mean, then we keep hearing that China's government actually needs to do more to boost domestic consumption because it's just not what it should be.
Clearly, that's for the Chinese government, but there is increasing imports into China. There is also strength of exports. And the fundamentals over the long term, I think, are quite clear. The Chinese economy is a powerhouse for the world economy. It will increasingly, of course, for example, access the South-South trade, which we highlight in our report, if you like, the Southern Silk Route. And one of the great trade growths is going to be from Latin America to China. So I do think that China is there. I do think it will continue to grow as the main motor of growth. But the report also highlights a number of other countries that we see coming through as well, not just India and Brazil, but interesting companies like Vietnam and Indonesia, for example.
All right, so as the Centre for International Business shifts, as you described, from developed to emerging markets, what will businesses then have to do to maintain their competitive advantage?
I think businesses need to look at where they're positioning their supply chains. They need to make sure those supply chains are globally competitive, and that means that some of that will have to shift to faster growing markets. So they'll be the recipient of more FDI, if you like, into supply chains. I also think that businesses in the developed world need to look at opportunities, not just in China, India, Brazil, of course, those are tremendous and exciting and they should do that, but they need to also broaden their perspectives and looking at more interesting countries. We talked about some, but perhaps also Turkey, for example. So those are the things that I think they need to do, and they need to understand that they can work hard to grow their business in GDPs of 2% in a geography, as opposed to looking in some of these faster growing markets where there will be a 7 or an 8% growth rate, which is much more attractive for businesses to access. So it's repositioning their supply chains and looking at where the sales opportunities truly are for their businesses going forward.
I mean, your CEO has spoken about sort of South-South trade as an area for growth, in other words, trade between developing nations. Where are you betting that that will actually take place?
We're already seeing it taking place, certainly in our business, from Brazil to China. We have, for example, at HSBC, a Chinese executive in Brazil and Brazilian executives in China actually undertaking some of that trade right now. So I think it's already happening. We're already seeing strong growth through our books, and I'm sure that's reflected in the wider macroeconomic numbers.
All right, thanks very much. Keir, Group Managing Director, HSBC.